Welcome to Market Movers. I'm Jim Uriel with Scott and Mark.
Hi, Jim.
Scott. So this weekend is the Jackson Hole Summit. Jay Powell speaks to us on Friday. Does he have a goal for this speech? Is he trying to push us one way or the other?
Well, I think the goal for his sake, Jim, is going to be basically not to take so much rhetoric or say retribution for what the Fed has said and done so far. I believe that this would help out the Fed and help out Mr. Powell if he could be a little bit more clear on his message and how the Fed is maybe feeling about, say, the current economic and interest rate environment.
So does that mean more dovish?
I believe it does, because I believe if you look at the economic data, certainly if you look at the interest rate curve, one who would pay attention to that stuff would suggest that the Fed has at least an opening to be a little bit more dovish than they have been so far this year.
Agreed. Before we dive into our trade discussion, I'd like to point out that these are examples, not recommendations or advice. Scott.
So, geez, Jim.
Sorry. I'm aggressive.
I'm still thinking, Jim. You know, we talked about this in the lead-in, about the Fed being a little bit more dovish. I've always said that they're kind of doves in hawks' clothing. They've had this stance out there that's been a little bit maybe more stringent on interest rate policy than I believe the market has wanted, certainly more than the president has wanted. So thinking that on Friday, we get, yes, you're laughing, thinking that we get on Friday maybe a little bit more clear picture about how the Fed is going to be more accommodative, I believe the market's going to like that message. So as an example today, Jim, I'm looking at buying the 29.75, 3,000, my friend, ES call spread for 4 ticks. This trade risks 200 to make a potential 1250, if I can say that easily. But I'm going to pay for this, Jim. So I don't want to just pay for this outright. I want to actually sell a put to help me pay for this. I'm going to sell a put on the ES at 2,800 for, yes, 4 ticks. Now, this expires at the end of the month on August 30th. The underlying was about 29.25 when I priced this. Why did I pick those levels, my friend? Well, the bottom, where I would get long, that's my risk in this trade, right, is by selling that put. I risk getting long at the bottom there by selling that put. The bottom has been defended. We've seen that bottom a few times in the ES in the last few weeks as we've had these major sell-offs. And the high end of that call spread is basically where I believe the market can kind of stop if we get that lift from the Fed before the end of the month. Therefore, that's why I'm using this trade expression today, if that makes any sense.
It does make sense. And I think if people understand their risk, and their risk is being long at 2,800. Now, that's 4% below where the market currently is right now. It's a fairly long way off. And I know you've done like these before with some success. So this is an interesting trade. I like it. But you do have to remember
True,
that.
And just the one quick thing is, I don't mind getting long there either. That's where I'm comfortable getting long if it does get put to me.
Well, so mine's a lot more clean cut. As an example, I'm buying the micro S&P E-mini at 29.20. It's trading around 29.25 right now. So actually right now is probably even fine with a target of 29.70 in the upside and a stop placed at 28.85. This risks $175 to make a potential 250. Like I said, the underlying is trading 29.25. Thoughts?
So yeah, it's good. Similar to mine. Like you said, right now is about a good time or so, give or take a point or two in the S&P. And again, giving that lift in the S&P that we've seen today on retail earnings, that I believe we're going to get into this Fed speak on Friday. That's why I want to express myself somewhat bullishly just for the next few days.
Last thing I want to add to my trade too is there's a level 29.50. If we get above it, it might be one of those times where you lift your stop up to break even and then may move your take profit up. That's what we do with futures, right?
We do, and that's one of the great things about kind of them being so modular these days is you can move those levels around based on how you're seeing the market action.
Thanks for joining us on Market Movers. I'm Jim Uriel, where we are helping to make you a better trader.